Hey guys, this is the market update for this week, right? I apologize, I wasn't able to upload this video yesterday because I was a little bit busy, but I'll try to upload every single Monday so that you guys have the update for the entire week, right? So for this week itself, you guys can see the economic calendar is pretty normal, right? There's not a lot of market moving indicators, right? Monday, Tuesday, right? Wednesday, Thursday, Friday, not so much as well. Right? Just need to take a look, but it doesn't affect the market in between, right? It's usually early on in the day itself, right? So that's something that you guys can just take note of, but it's pretty simple week, right? Which you guys can actually expect the market to move a little bit more, right? Because no one's waiting for some sort of news, right? Usually when people or the consensus is to wait for the news to come out, the market doesn't move much, right? Because they want to see what impact does the news have, right? So this week we can see the market moving a little bit more, right? Being natural. So yeah, something that you guys can take note of. Next is the fear and greed index, right? So I always look at this every single week. You guys can see that the index right now is the very end of greed itself, right? It's very close to extreme greed. So that's something that you want to take note of, right? When there's extreme greed, right, you want to be a little bit more cautious, right? You don't want to go all in because the market can reverse and uh, 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 do you a disfavor, right? So what you want to do is at this point of time, you still can trade, you still can invest, right? But do it moderately, right? Don't go all in, right? So that's something that you guys want to take note of for the fear and greed index itself. Next for the seasonal chart. So last Friday mentioned that for June itself, right, it's a little bit more of a downtrend, right? We're still in the second week of June, so just need to take note. But like what I mentioned, this is just a benchmark, so that's something that you guys can take note of. Okay. All right, so let's go into the S&P 500 map. So I want you guys to take note of what you guys see here, right? What you guys can see here right now is that in the S&P 500, majority of the stocks are green, right? Majority of stocks are green, right? And why I want to point this out is because if you go back 1 month ago, right, the 1 month performance, you can see that it's vastly different, right? What is the difference, right? The difference is that um, for the tech stocks, for the major tech stocks, right, you can see it's been making high highs, right, high highs and higher lows, right? And you can see like Microsoft, NVIDIA, Google, right, all have really amazing profits, right? But you can see the smaller stocks itself, right? Right, the smaller stocks inside the S&P 500, right, are usually red, right? Usually red. And what happened was that just 1 week ago, you can see that there's a vast difference, right? The entire map of the S&P 500 is mostly green, right? And that's something that we can take note of is that you can see that the smaller stocks are starting to start to gain momentum, right? And because they gain momentum, I think what you guys can do, if you guys are trading, you guys can look at these kind of stocks, right? Like healthcare, aerospace, real estate, right? Energy, right? You can look at these stocks and see whether you can trade them a little bit more during this period of time, right? Because what I feel is that the tech stocks are a little bit overbought, right? And they've been moving the markets really much, right? And most probably it'll be ranging or it might retrace a little bit, right? But the smaller stocks over here, it has not moved, it has been lagging, right? And these are the places that you can take more opportunities when you're trading or if you're investing, right? Or if you have a company that you want to buy out of all these stocks over here, right? This is time that you can buy as well, right? Because you know there's much more stronger momentum going up. Okay, right. So that's something you guys can take note of when for this week itself, right? So before I go over more of the other stuff, let's go into the charts real quick, right? So for the S&P 500, you guys can see that we are at some sort of support over here, right? You can see it in my daily chart, right? I've drew this rectangular over here. You can see that it has tested quite a number of times, right? Here, right? here, no, not here, right? Yeah, so quite a number of, yeah, you can see that it's a strong support, right? If you go all the way back up, you can see that somewhere over here as well. Okay, yeah, because I didn't want to draw this because this is acts as a support, right? But what I want to show is some sort of resistance level. Okay, right? So you guys can see that we're at some sort of resistance level already, right? So that's something that you just move the drawings real quick. Okay, so right. So I want you guys just to be a little bit careful of the S&P 500, right? Because we're at some sort of resistance, right? But I don't expect the market to drop all the way down, right? You can see that the market has been pretty strong since the start of October, right? And start of the year itself, right? It's been going up, right? And it has really made the highs, almost the highs of when it was last year, August, right? And it's around also the same time around the June level as well, right? So that's something you guys want to take note of, right? And why I want to point this out is because why I think it might range, right, or it might continue to go up as well, is because you think about it, right? Let's go back to the map. So, right, if the tech stocks over here, right, if they retrace, right, I don't think it will fall where because a lot of these tech stocks, their financials, their reports has been pretty good, right? So it might retrace, but I don't think it will like crash, right? But you can see that the smaller stocks over here, they are gaining momentum, right? And when they gain momentum, you can see that it's about almost like 50%, 50 to 60% of the stocks over here, right, out of the S&P 500, right? So you think about it, if the big tech stocks are retracing, right, but the smaller cap stocks, right, the small stocks, right, are gaining momentum, right, you can see that it would most probably either range, right, it might most probably range, or it could go a little bit higher, right, go a little bit higher, right? But I'm not saying that I'm not saying over the next 2 days it's gonna go one straight line up, right? Stocks, right? The market doesn't happen in that manner, right? So that's something that you guys want to take note, right? When doing this, okay, right? So what I want to show you guys is Fibonacci as well. So let me just show my retracement, right? Just to show you guys where are we right now. So this all is apart. So you guys can see that right now, right, we are at the 0.618 level, right? So the Fibonacci retracement is basically it acts as some sort of, right, it acts as some sort of support levels, or it acts as some sort of support or resistance levels that you guys can mentally take note, because quite a number of people use that, and you can see that it works, right? You can see at this level, right? You can see there's some sort of support and resistance, right? So we're at the 0.618 level, around the 429, 430, right? And if I don't, like what I mentioned, I don't think it's gonna crash, right? Because the market has been pretty strong, right? But it might retrace back, right, to this level over here, right? It can continue to go up, right? Or it can range around this area, right? But that's something to take note. Why I mentioned this is because if you're planning to buy or invest anything at this point of time, I don't think it's the best time, right? You probably want to let it retrace back a little bit more, right, before going in, right? But if you're day trading or swing trading, that's something to take note, right? Day trading you can, right? But swing trading, you do know that there's some sort of resistance over here, right? You wanna, and if you're planning to swing long, right, you want to wait for it to retrace back. But if you're swinging to short it, different story. Okay, right. So that's something that I want you to take note of for the S&P, right? Next is there's this ETF, right, called the IWM, right? So the IWM is more on the smaller cap stocks, right? And I feel that that's where the opportunity is, right? Something that you can actually take note, right? and look at all these kind of stocks inside the IWM, right? And you can swing long or you can trade and invest them as well. Okay. So for the IWM, you guys can see if I draw a line, let's see, up here, I'm going to something wrong with my mouse. But I can somewhere here probably. Right. Okay. Right. So you guys can see that it's gaining some sort of momentum, right? Why I say is because it has been ranging for the past the past few months since the start of March, right? You can see there's some sort of support and resistance over here, right? It's been just ranging at this area, right? And only recently it popped up, right, and broke the downtrend line that I drew here, right? So what I like to do is usually I don't like to go all the way in at the top, right? What I like to do is wait for because it could be a fake out, right? You never know what happens, right? The market could have just, right? You have this candle over here, right? It can fall back down, right? Or it can actually go back up again, right? So what I like to do is I like to always draw this rectangular box, right? And I wait for it to test this box again, right? And if it breaks up to the upside, then I'll continue taking the long, right? As of now, it's retraced, so I'm just going to wait for it to break out again, right? And then we can go all the way up. Okay, right? So that's something that we can take note of for the IWM. So there's a very good potential, right? Now we're just waiting for which direction it's going to go, right? If it continues to go down, right, then right, I won't take the trade, right, or I won't invest, right. But if it goes way up, right, I have a huge potential, right. You guys can see if I took a position over here, right, and do a stop loss maybe somewhere around here, right. A 1-to-2 ratio, it's a pretty decent upside, right, because you can see that there is no major resistance level, right? Maybe somewhere around here, right? But that's something that right, we can work with, right? Because it's a 1:2, right? And if it breaks up again, right, we can do 1:3. Okay, right. So that's something that we can take note of for the IWM, right? So just wait, right? Be patient, right? Especially in this market, you can see yesterday night, right? Thankfully, Monday, it's a good opportunity for me to share, right? Monday, you can see there's some sort of retracement, right? And you can see the entire market, a lot of the stocks were down quite a bit, right? So imagine if you just went in yesterday, right? You might have panicked, right? Because you might see paper losses. Okay, right. So that's something that you can take note of. So I think the last chart I want to show is actually QQQ, but then for that, let me go back to Finviz and go to ETFs. Right. So for the ETFs, you guys can see over here is that, right, you can see that majority of ETFs are kind of in sync last week, right? You can see the S&P 1.69, QQ 1.7, the Dow Jones 1.6, IVV 1.68, VU 1.72, right? You can see that they are moving in sync, right? Which is great, right? But you do know that QQQ itself is kind of overbought, right? If you go for the 1 month performance, you can see that QQQ is 12%, right? S&P 5, the Dow Jones 1.45. So the Dow Jones, right, or the IWM, right, has potential of the upside, right, because they're lagging right now, right? The tech stocks might range, right, might retrace, right? But the smaller stocks, right, there's a lot more momentum, right, to catch up, right, because they're lagging, right? So that's something that I see that you guys can take note of, right? So going to the QQQ charts, right? So go to QQQ, right? You can see that I drew some of my support and resistance levels, right, nearer to where the price point is, right? But what I want to do is I want to use my Fibonacci retracement, right, from the high, right, all the way to the low. Right, you can see at the 0.618 level is about 350, right? You can see that it's currently kind of overbought, right? Currently kind of overbought, right? So what I do expect is some sort of retracement level, right? It could retrace a little bit, right? To maybe, let's say maybe this area, right? But I don't think it will go all the way down and crash, right? Because you can see a lot of tech stocks making lots of money and their financial statements are pretty strong, right? So that's something that we'll take note of. But I don't think it will crash, right? I think we have a pretty nice retracement. So for those traders who want to short the market, right? I think QQQ has some sort of potential to do so, right? Right, so that's something that you want to take note of, right? Because it's currently really overbought, right? And why I say that, I think in my previous video or 2 videos ago, right, you can see that our wave 5, right? You can see this is, this is wave 1, wave 2, wave 3, wave 4, and wave 5, right? And you can see that our wave 5 itself, right, is super huge, right? So that's something that you want to take note of, right? I'm pretty sure there'll be some sort of retracement, right, before going back up again, right? So that's something to take note of when you are trading QQQ, okay? Right. So yeah, I think that is all for my market updates, right? To summarize, if you guys are trying to buy any tech stocks, don't buy now, right? I don't think it's the wisest idea to do so. Right, wait for some sort of retracement and then you can go in again. But what I do see is for the smaller cap stocks in a way, right? You can see that they're gaining momentum. Oops, right? You can see that they're gaining momentum, so you guys can take a look at it, right? And if it breaks up, right, breaks up the downtrend line, right, you guys can go ahead and trade them. Okay, all right, so yeah, that is all for today's market update, right? Have a safe week, right, and have fun trading.